So,
all right, cool. Well, thanks for coming on, guys. So we have a really interesting lineup today with the folks from CrowdStreet, and we've been really looking forward to having you both on. And I guess if you don't mind, just real quick, give us a quick intro of yourself and what your position is at CrowdStreet.
Sure. Hi, I'm Anna Marie. I've been with CrowdStreet coming up on 9 years, so kind of been there since the start. My role at CrowdStreet is I'm the Executive Managing Director of CRE Investment, so I oversee the investments team that is kind of bringing in offerings for our members on our platform.
So you're CIO of the company, essentially, more or less.
Something along those lines, sure.
Okay. And John, tell us about your backstory coming on the company and what it is you're doing.
Great. Yeah. Well, thank you guys for having us here.
Absolutely.
So John Imbriglia, I'm the CEO of CrowdStreet. I joined last summer, and so relatively new. It's sort of 9-10 months into the role. I've spent my entire career at the intersection of private markets, high net worth investors, and technology. First on Wall Street for several years, and then as an early founding employee of another fintech business that focused on private markets that got quite large, spent some time as a venture capitalist, and saw an opportunity to sort of take what CrowdStreet has built to date and expand the vision from here.
Cool. Well, I mean, I don't want to take over the conversation here, but I'll say that, crowdsourcing has become so popular. It's been something that everyone has talked about since probably since 2012, right? When kind of the floodgates were opened legally to go out there and raise funds from individuals and retail investors from all over the place. I think you guys are one of the bigger names in the field. You've been around for a while. One thing that I think let's talk about the service lines and what it is you're offering first, and just the backstory of
if you can give the listeners a breakdown of what you think the business is today, and from your perspective.
Sure. So CrowdStreet was founded over 10 years ago, and the original concept was to create a platform where high net worth investors could more efficiently access real estate investment opportunities. So sort of the core business number one for many years. You mentioned crowdfunding there in your question. I would sort of take that slightly differently in that, as you think about what's happened broadly, whether it's real estate, private equity, private credit, there's just been a large move over the last 10 or 15 years in asset managers figuring out better ways to deliver private market investment opportunities to high net worth customers or retail investors, as opposed to the big institutional investors, university endowments, pension funds, et cetera, who are the typical consumers of private real estate, private equity. And so CrowdStreet was sort of very early on in that identifying that trend. And again, started with just one asset class. Where we're going now is in sort of building on that legacy, we're expanding into other asset classes. And we have a new brand and sort of a whole new brand story that sort of supports this mission to give our members not just access to private real estate, but to things like private equity, private credit, venture capital, et cetera. So think about it as a private markets platform giving people access to things they would not otherwise have access to, and not through a financial advisor, but sort of in a self-directed manner. And it started in one asset class, and now it's moving to multiple asset classes.
So starting off in real assets, commercial real estate, different asset types within real estate,
That's right.
And then branching off into kind of the larger private equity world, if you will.
Correct. That's right.
Got it.
Yeah.
Okay,
very interesting.
Well, I think we want to talk about what it is you're working on. And I know, John, you've come on recently and you're going through a rebrand, and a lot of new cool things are happening at CrowdStreet. But the elephant in the room, right, is there was some press as of more recently in terms of a client who had misappropriated some funds. I know you guys have worked really hard in addressing that and moving on, and now you're focusing on the future of CrowdStreet. But give us your take on kind of what you guys are working on and how you're getting past that.
Yeah. So the incident you're obviously referring to was a developer called Nightingale. His CEO's name's Ellie Schwartz, who's now going to prison. But a few years ago, he misappropriated funds from our clients, several others. And as soon as we sort of became aware of the incident, we were foot forward, have worked with the SEC, have worked with the regulators to sort of bring him to justice, to recover funds for our clients. And so we've been very proactive in in that work. There are ongoing legal issues associated with all of that we're aware of, that we're well-resourced to fight, so to speak.
Sure. Spill the beans here today.
But our focus outside of that is on the future.
Yeah.
And so while we take it very seriously, and I think our actions with the regulators and our clients and the recovery efforts we've led have demonstrated that, it's not distracting us from the future vision I was just laying out.
Yeah, of course. And obviously this is interesting. You've been with the company 9 years, so you've seen a lot of changes, growth overall. You were kind of there through the issue. And then John, you came on recently, more recently to steer the ship in the right direction. So I'd love to hear some perspective kind of from both sides. John, we could start with you. You were on it. When you came on day one, what was your mindset? What were you thinking? What was the biggest issue that you wanted to tackle?
Yeah.
And where did you want to take it?
Yeah, so I think, so just prior to CrowdStrike, I was working as a venture capitalist, making investments in this space and sort of the fintech, private security, marketplace space. Had spent, like I said, nearly a decade at another business that does something kind of similar to CrowdStrike, that's the market leader in sort of providing private investments to the wealth management community.
What business was that?
It's called iCapital.
Oh, sure. iCapital is a huge company.
Yeah, spent many years there and still have many great friends there. And saw sort of the success iCapital had in opening up the wealth management community vis-a-vis the use of technology to the private markets. And what I saw at CrowdStrike was, 15 years ago, or call it 12 or 13 years ago, when iCapital was getting formed, the concept of particularly the independent wealth manager, RIAs, independent brokers, accessing private investments via a technology platform was somewhat foreign. I mean, the people didn't quite get the concept when we were bringing it to them very early on, because that group of folks had historically not had very strong access or any methodical access, certainly through the use of a technology platform, to privates. When I looked at CrowdStrike, I actually saw something very similar, but sort of the next level, which is directly to consumer, or having consumers not with the use of a financial advisor have access to a truly diversified, what would be the opportunity to build a truly diversified private market and investment platform. And so that was the opportunity I saw coming in. I thought, man, CrowdStrike's raised over $4 billion in one asset class. We have tens of thousands of active clients. We have a great team. We have a great technology platform. What if you took that and then expanded it? Not moving away from CRE, actually continuing very strongly in CRE, but expanding that. And also, if you look generally at what's happened in the private markets and the retail investor community, as you may cover in some of your your work, there's been a large rush of the largest asset managers, so Blackstone, Apollo, Blue Owl, et cetera, building teams and products for the wealth management community, because it's a very large potential distribution channel for them. And, they believe they can help high net worth investors achieve their objectives through some of their private market investment strategies. What we see here at CrowdStrike is, what if you just took sort of that playbook, but brought it directly to the millions of Americans who don't use a financial advisor for these types of assets? And we believe there's no current dominant platform globally that does that. And we're well positioned to, be one of the leaders in the space based on the historical success in the CRE.
And John, correct me if I'm wrong. Previously, let's say if I was a multifamily developer and I wanted to raise money through this RIA network, I have to first go to the RIAs, get registered, put on whatever platform they're with, whether I did it at like UBS and I got on their system, or Goldman, or one of the big banks. Is that right? Was that the process? I first have to go get vetted, get onto the network, then kind of educate their clients on who we are, what we do.
Absolutely. And I would encourage any asset manager to think about wealth management as a distribution channel, because I still think it's a very, attractive distribution channel for asset managers. However, we represent a different distribution channel. We represent tens of thousands of members, and eventually hundreds of thousands of members who just don't rely on a financial advisor for these types of things.
Right.
And that's, we think that's a growing population. We think with the generational wealth transfer that's happening right now, we think with younger people being more comfortable buying complex products online, with sort of the product development that's happened in private investment world, which is making these sort of products maybe easier to understand, easier to subscribe to. That's what gets us, excited.
Yeah.
Still mailing paper checks and leaving voicemails like it's 2003? Your investors aren't looking for nostalgia. They're looking for their distribution status. InvestNext brings your investor experience into the 21st century. Branded dashboards, automated updates, and no more 9 p.m. phone tag. Scale your capital without scaling your chaos. Visit investnext.com/nocap to build investor trust without the burnout. That's investnext.com/NOCAP.
Yeah.
What percentage do you see your placements being between real estate and other asset types? Is there a goal in mind, or is it just what happens?
I wouldn't say there's necessarily a goal. Our mission is to provide a broad menu to our members to allow them to invest in the private markets in whatever way makes sense for them based where they are in their financial journey and their financial life. And at any kind of menu like that would include real estate, private equity, private credit, and then it's up to our members to decide what's best for them. But our goal is to give them optionality and give them the tools to build a diversified private market portfolio, real estate being a part of that. And Anna Marie leads a team that actually has a distinct sort of advantage in CRE because we've been spending 10 years building a pipeline of middle market private real estate sponsors that you would otherwise not be able to find on your own.
That makes sense.
So the non-real estate, that's one avenue that you guys are really focusing on and branching off of. Let's talk about real estate, since this is a real estate podcast.
Before we even get there, as I mentioned before, you've been with the company 9 years, right? So what was it when you just joined? What was it? What got you excited?
I think
what
so.
Did you think
Prior to coming to CrowdStreet, I'd spent some time kind of on the investment sales brokerage side with CB Richard Ellis. But pre-CrowdStreet, I was working for PNC kind of on their LIHTC and historic tax credit arm, where basically we were syndicating equity investments out, but from large institutions and placing those. And I think also just within the commercial real estate community, I think at the time, call it back in 2016, right? If you're a group going out to raise capital from a group of investors, it was a really inefficient process. Typically, you were going out to friends and family, people you knew, right? You call it like going to the country club and collecting investments, right?
If you're lucky enough to.
Yeah. And so I think it was just at that point in time I saw, and I think a lot of people did, is there are a lot of groups that kind of started back then when the Jobs Act changed, that it was an area that was ripe for disruption, and there was a better way to do it, especially with kind of the emergence of tech and finding those efficient solutions. So I think that's what drove me to CrowdStreet, and I thought, let's try this out. I think when I started, I was like, hey, maybe this will work. Maybe it won't. Maybe I'll be here for a year. Company doesn't make it. But here I am 10 years later. And it's been, an interesting ride with lots of ups and downs. But I think just how the industry has grown, and I think more so how our members have kind of grown from initially, I would say it was people who saw kind of CRE investing as a hobby to kind of a more broader member base as kind of making a large investment online without these wealth managers, just as John said, much more widely accepted, right? Just transacting in that online environment has become so much.
Is it hard?
Accepted.
It feels like to me, it's got to be a hard balancing act between having enough deal flow and having enough investor capital. How do you balance that on an ongoing basis?
I've always wondered that.
Yeah, I think from my perspective, I think our goal is always knowing where we sit, like in the transaction, right? We're not managing these investments. We are simply connecting a sponsor who's looking for equity and investors, right, who are looking to get access to these alternatives and hopefully make, a good investment. So we're kind of doing that pre-diligence on the deal. But I think in all our conversations with groups that we're working on, right, we're a best efforts platform, is just being open in that dialogue of like, this is kind of where we see investor demand at this point in time. Obviously, it's going to go up and down with the markets. It's not staying static, and being upfront and having those conversations. And I think just, having been in the business for as long as we have, we've really kind of grown those trusted relationships with these sponsors over time, right? We've done multiple deals with many sponsors and have, had conversations and kind of built that trust. And we have the data, right, from the multiple deals that we've done over the years, having raised, right, $4.9 billion. We have a big big pool of data to pull from to kind of see where that demand is and just being upfront in those conversations.
Tell us about how you're vetting deals and sponsors, and how quick do these subscriptions fill up? How long does that take? I imagine, maybe in this environment it could be a little bit more difficult. Maybe for the right deal, and it's super easy. I don't know. You tell us.
Yeah, I mean, I think in the frenzy environment when rates were low and everybody was looking for access to commercial real estate, obviously it was a lot easier to raise for investments versus now. I think in terms of our vetting process, right, we definitely are focusing a lot on sponsorship, right? We want to understand the groups. We're diving into their track records to understand their history, doing background credit checks, AML, KYC checks. We're also spending a lot of time as we're looking at the track record, I think, particularly in this environment, understanding not only how have their realized deals performed, but also what does their current portfolio look like? Is there any stress in that portfolio that we need to be aware of that could impact kind of this future deal? Did they have the team built out to manage their upcoming pipeline? So spending a lot of time there. Also, obviously, underwriting the deals. So,
Anna Marie, this is a lot of diligence, and naturally, like your company should be doing a lot of diligence. It's good that you are. I'm trying to understand the balance. If I feel like just speaking from a principal who's been in the position of having to get equity really fast.
Yes.
That's almost the story 90% of the time, right? How can principals think about it? How can they think about CrowdStreet in terms of a timeline? Like, what's a realistic timeline for somebody to get on? And also, does that like facilitate specific deals? Like, is it usually people who have land and are going through entitlements so they have time, or is it like someone who can buy a building in 30 days?
We've touched on all of those. I think 30 days is going to be tight for us, right? No question. But I think as a group is looking, say, for an acquisition, typically if we're brought in when they're starting to negotiate that LOI, that's a good time. Also, if a group is interested in using CrowdStreet, I'd say we can always start kind of the sponsor vetting process before they have a deal, right? To get to know the sponsor.
And that happens sometimes.
Definitely. I would say typically you would expect 30 days to go through our vetting process. Sometimes if, you have your diligence items and everything's aligned and you're able to turn things over quickly, we can move as quickly as 2 weeks we've done, especially for a group that's worked with us and is familiar with our process. Then we have our production process, which typically, again, is going to take some time, right? We're going to be vetting the legal documents for the deal. We're going to help you put together content that's going to go up on our offering detail page that has to go through our compliance department. So that's going to take, call it another two weeks to 30 days. And then you have the fundraising period, right? Which, to your point, is going to take a little bit longer in this environment than what it historically has. I'd say typically we're targeting 30 days for that fundraising process to get funds into escrow. You'll see the dollars there. And then once you have your closing diligence, you're closing on the property. That's when the equity is going to get released to you.
Tell us, in terms of the equity, is it mostly LP equity? Do you ever have a GP stake?
Definitely.
Pref equity? What type of?
So we've touched on, we've done all of those on the platform.
Okay.
I'd say the majority is LP equity. Again, we're also typically we're passive equity, right? CrowdStreet typically we're not putting together our own SPVs that we're managing, right? Our LPs are going into the JV that the sponsor is putting together, and typically our investors are not getting control rights there. So yeah, we're LP equity. We do co-GPs. We've done a few co-GP funds on the platform. I think to date we've raised about $150 million across those funds. I think it's been 12 or so. So yeah, we kind of play across all those. So we've done preferred equity. Again, it's kind of more so, I'd say, equity that's kind of in a priority position, just given that, we again don't have the necessary control rights, but we're just getting priority repayment.
Sure.
John, so tell us, what other big changes? You spoke a little bit about the product lines, services. What are some of the other big changes that, you have envisioned and, along with the smart people that you have at CrowdStreet? What are you guys working on?
And opening up your investment thesis with additional types of investments.
Yeah. So in support of that larger mission I was describing, as you think about a business like ours, there's a lot of things that have to happen to make that a realization. And so, one, we've come up with sort of a new brand and a new storytelling mechanism to tell the market about what we're doing, and that's now sort of live in a beta format. You'll start to see more of that. So to that end, we hired a new chief marketing officer. His name's Rhodes Ponzer, who's sort of spearheading that for us. And so that's sort of like one of the public changes. You think about, again, a business like ours from a technology standpoint, we have to update the technology to be able to support additional asset classes. Okay. Because, in my experience of 20 years of working with high net worth investors and private markets, even if the return is good, if the client experience is bad, that tends to be not a very good outcome.
Sure.
And so we want to make sure our technology from a subscription processing standpoint, an onboarding standpoint, a reporting standpoint can handle third-party assets like private equity or private credit funds in various different structures. So there's some tech work that's going on. There's some branding work. There'll be additional advertising work to go out and get new customers to help us and attract new members towards this, new end. And then of course there's, how do we find the funds, so to speak, like sort of what Anne-Marie was just talking about on the CRE side. And I think what you'll see from us there is a few things sort of, as this year goes on, you'll see us announce partnerships with large alternative asset management firms that sort of believe in this mission and, and want to be first movers on our platform because they believe in this as a distribution channel. I think you'll see us start with some diversified products within the private markets, diversified private equity, diversified private credit, to allow people to build like a baseline of a private's portfolio, and then eventually maybe go into slightly more esoteric things, growth equity, venture capital,
When you say diversified private credit, like what's the diversification you're looking for? Just by asset class or?
What I mean there would be, for example, launching or making available a fund vehicle that has many, many loans within the fund. So as opposed to on the CRE side where we've done individual deals, we'll start on the private fund side with more diversified offerings to allow people to build sort of building blocks there. One day we could have individual co-investments, for example, which would be more akin to the individual real estate deals, but we're not going to start there. And, to that end, you'll see us announce, partnerships with groups that help us with education, help us with manager sourcing and due diligence, because that's a critical, obviously, component to this. And, we're working on those now, and you've caught us at a little bit of a time of transition, but if I'm here again in 6 months, we'll be able to talk about those partners. And again, these are large, well-known groups that are what they're excited about is obviously what we've built to date, and they're just very excited about, man, this could be a really interesting channel for me. I've seen what's happened in the wealth management community, but man, what about all these individuals that want to access these types of products directly? Yeah, and how can I find them?
Let's be real. Investors expect more than a quarterly PDF. One delayed update, one missed email, and suddenly that LP's investing elsewhere. InvestNext helps you stay on top of it all, even with a lean team. Your LPs get the real-time access they want. You look like a pro without the additional IR headcount. Today's LPs have options. With the right platform, you'll be trusted, not ghosted. Learn more at investnext.com/nocap.
Yeah, it's such a missed opportunity out there. And I think I keep using the term democratizing, but you are democratizing investments for people.
It's funny. So that line, democratizing alternative investments,
it sounds good.
Has been around a long time. Even from my previous business in sort of 2013, when that business was started, we were sort of throwing around that line. I think I get it, but I think from our standpoint, we're actually not. We don't want to democratize things because investing is very private. Investing in private assets, $25,000-$50,000. That's a lot of money. That's a very personal thing.
Yeah, you still want this to be a relationship.
Correct. So we actually sort of I've moved away from that tagline. Yeah. And because we believe this is private, it's personal. It's actually not for everybody. It's for one person. It's for the investor. And so it's a slight change in the way we think about this. But said a different way, we are trying to create a platform that makes it easier for high net worth investors to efficiently access a broad set of private market investment opportunities.
Sure. That makes sense.
I have a question for you on that. I feel, again, this is totally opinionated, so take this with a grain of salt. When you have high net worth clients, right, part of the reason why someone like that would go to a big bank is the client relationship with whoever their advisor, banker is. given that CrowdStreet's mostly digital platform, like what's the bridge for you guys? How do you build that relationship and trust with someone and say, you're putting a lot of money at stake. Here's why you should do it with us, not, someone who you golf with on
you can
Sundays.
go drive down the street and meet with them face to face.
We have a very diverse set of members, so any answer I give would be just at a high level, and probably not. We have some people on our system who've invested in their first private investment, and we have others who have many private investments. A few things. Obviously, we rely on technology to help with the sort of the first level of client service, the first level of investor relations, the first level of reporting. The better tools we can build there. We're looking at some AI-driven tools, for example, to help people better understand what's in their portfolio. There's been a lot of product development from the technology side over the last 10 years in that space, e.g. technology tools that help people with large pools of private investments better understand how those assets are performing.
In real time.
Yeah. And so that's sort of one. We do have, a well-staffed investor relations team, which does a lot of the typical investor relations client service work you would think of, from a sort of a asset management, firm. We also hope to be doing a lot more sort of education and outcome-oriented investment up front. So, e.g., if you're interested in income, here are a multitude of products that might help you achieve that investment objectives, and try to get people better aligned up front when they make the investment in and around what they're trying to achieve from an outcome standpoint. But it is a tricky balance. There's no question about it. We have close to 30,000 active investors. We have to use technology to help service that pool of assets. And then the other thing I would say on the financial advisor side is that many of our clients, do use financial advisors for a certain part of their financial lives, and that's obviously at their discretion. Candidly, there is a fee issue that goes along with this as well. If you're coming directly to the platform, reading the due diligence we've offered you, and investing these things directly through our system, there is a fee that is bypassed.
Sure.
Yeah.
And that's a big thing, of course.
And whatever the fee is, the financial advisory firm would be charging. And we think some of our members like that.
Yeah. I laugh a little bit when I say this, but not to beat on Gen Z too much, but it's kind of going in the right direction, right? Because a lot of the much younger generation, especially now, who can invest in their first or second job, they already don't like talking to people.
Yeah, it's the Robin Hood effect.
I think if anything, you're just giving them good tech and they can kind of be isolated and working on themselves. I feel like you actually have a big wave of clients coming over the next 5 years. Yeah,
we hope so. We also think there's just a lot of sort of tailwind behind the business from a macro standpoint. Private markets have obviously gotten much larger over the last 15 years. Private companies are staying private longer. There's been a lot of product development in the space. And so all of those things allow us to offer out a broader set of offerings to our clients. And I want to circle back to something Anna Marie said on the real estate side, in and around sponsors and why they work with us and how long it takes. Anna Marie and her team have built such tremendous and deep relationships with many of our sponsor clients. And our sponsor clients, be they the first time we work with them or the 10th time, they actually just believe in this, right? They see this as a wave that's coming in the future. Mm-hmm. So whether it's a small amount of money to start or a large amount of money, they believe over time this will be an attractive distribution channel to them. And so there's a little bit now, as Anna Marie mentioned, we've already raised over $4 billion. We're certainly not the new kids on the block, so to speak. And there are a lot of people trying to attack this problem. But our size, based on the total addressable market, we believe is still very small. Sure. And so there's, sort of a coalition of the willing effect where whether it's a real estate sponsor or a private fund manager, they believe in this over time will be a big part of their business. And that's another reason, groups that otherwise don't need this capital, they could get it somewhere else. They don't, it takes 30 days, we've got a deep process, but they do it because they believe in this as part of their future.
Yeah. To the extent either of you know, what's the average that you raise on any given year?
Average in any given year has obviously oscillated a little bit.
Yeah, sure.
It was sort of peaked in ZIRP, and it's come down since then, and it's starting to trend back up again.
The average deal size, what would that be?
On the commercial real estate side, I'd say total cap of the deal on average, probably 20 25 to 30 million.
Okay.
We've gone up is, way above that. We've done some below.
You're opportunistic. And,
Exactly. So we kind of look at the deals on a one-off basis.
Okay.
But that's probably the average.
I'm curious, give us, I'm sure, Anna Marie, you have some stories out there, some positive stories. Give us something that's memorable. A client you worked with, an investor you worked with, where it's
What's
just
something that comes to mind?
It's just something that you won't forget.
Something I want to forget.
Without
putting you on the spot.
without us leading the witness too much.
Yeah, but I
You
imagine,
think about historic deals.
You guys have worked with so many different types of sponsors. I'm sure you've gotten a good handle on who you want to work with, and there's been I'm sure some stories where something got done and you were just so impressed with the results. Or
Yeah, I think probably I'd say there's two things that stick out. I think one that stood out for me was when we did our first deal with Greystar. And I think just knowing that where we started in 2016, where it was a lot, I think, of the sponsor side was a little bit skeptical about fundraising in an online environment.
So you were doing it for how long before you
So
did
that
a deal with
was, I
Greystar?
believe the first Greystar deal was, I want to say 2019, 2020.
Okay.
So it was a few years in.
Yeah.
And I just felt like at this point in time, like we're accepted, right? We're working with Greystar. Sponsors have accepted this form of capital raising, and we can show that we're actually are bringing meaningful dollars to the table, and our ability to connect members with some of the best sponsors in the business at that point in time.
Sure.
And I think at that was just a big juncture where doors opened, and we got a lot more sponsors coming to the table. I think another one that stands out is working with groups like Rhino Capital, which is a group out of Boston that I think we've done many deals with them along through the years, but really have helped them kind of grow their business. And we found a good sponsor that has grown with us and really sees us as a true partnership. So I think those kind of stories.
That's a really interesting thing you bring up, though, because I think what investors often might not think about is it's a lot of work as a sponsor with investor relations and reporting.
Oh, yeah, of course.
I mean, that in of itself is a full-time job. So when you can have a third party who is essentially acting as, a third arm of your business, I'm sure that frees up their time to go out and find more deals.
Exactly.
Have you done real estate credit to date, or has it been all equity?
We've done some mezzanine debt funds with groups like Pearlmark. We've also done RD Advisors, right? Residential loans. We've done a couple one-off kind of debt deals, but it's been a handful.
Let's talk about debt. I mean, the credit environment is very interesting right now.
Sure.
It has been for a while. How are you guys approaching credit? Are you a lot more conservative in terms of leverage?
Yeah,
What are you looking
Do you have
for?
limitations on your investments?
Definitely, we're much more conservative. I think if you're looking at our pipeline, today compared to a few years ago, right? I'd say like a multifamily value add deal. I think historically, potentially we would see deals coming through with leverage up to 70%. I think in today's environment, we're so much looking at deals that are topping out at 60%, typically between 50 and 60% LTV. We're definitely paying very much attention to kind of downside protections in those deals. We want to make sure that kind of the in-place cash flow can service the debt. And I think as we're looking at potentially like value add programs and whatnot, we're kind of looking at deals that are reserving a lot of that capital and equity rather than relying on cash flow.
Yeah.
Just due to, there's just so much volatility and uncertainty in the market right now. So definitely a much more conservative approach. We are seeing some groups that, even with the low leverage that I think is available just due to the capital markets, they're kind of putting on pref on top of that. We're kind of staying away from those deals. I think just that risk profile right now doesn't quite align with what we're looking for.
Now, are you playing in the credit space?
We're currently looking at a few debt funds that are coming through. So definitely it's something that we're interested in. I think currently in the pipeline, there's kind of a mezz fund that we're looking through for kind of on the multifamily side. So definitely we are seeing those in the pipeline as well.
So what does that look like? Is this someone who has an existing mezz or pref equity fund, and what do? They just list it effectively with CrowdStreet?
Correct.
What's the structure?
Yeah, so they have a fund. They're syndicating out to raise capital for their debt fund. This is a group that we've previously done a debt fund with, but more so on the residential side. And now we're looking to do more of a play in the mezzanine space. So yeah, they'll have their fund docs. Our investors will come in as LPs and they'll go offer that to other groups as a debt product.
Got it. Let's talk about something that should I even bring up AI? I mean, it's like people talk about it too
you
much.
got a company who's infusing tech into everything they do.
I guess we have
it.
to. It's like, these buzzwords now. Tell us, how are you looking at AI now and utilizing it if you are?
Yeah, I touched on this I think a little bit earlier, but as we think about our platform as solving sort of end-to-end problems for clients, be it getting education on the private markets and real estate, doing due diligence on these offerings, getting rid of the paper associated with these offerings. Actually, there was a sort of a pausing on that or double clicking on that. There was a war story from back in the trail wherein the head of private investments, one of the large Wall Street banks, at one point, one of their largest clients would just send them on every sort of K1 season just a box of K1s and just saying, this has to stop. This has to go.
You're talking about
this has to go digital.
Wasn't this Lehman?
I actually worked at Lehman Brothers, but it was not Lehman Brothers. But
who wrote the notes? I'm blanking on his name right now.
It was a classic story where the head of private investment said, I cannot get this box from my biggest client of paper every year. It was a while ago, but I'll never forget that one. But so we're removing the paper obviously from process, making it digital experience, subscription processing, KYC, AML. Obviously, then there's the reporting side. And AI can be applied actually to a lot of those functions. And so, we believe AI can be applied on the front end to investor relations queries, for example. How do people better, through a chatbot, for example, have someone or some chatbot to speak to that can sort of be in place of an IR service person, as we were talking about earlier. On the back end, there's actually some really interesting things happening with reporting. And what I mean by that is if you think about a platform like ours today, and obviously we hope to grow it very substantially, there's tens of thousands of investment positions that make up that $4+ billion of assets. So that's a big book of assets, so to speak, that we oversee. How in the world do you get insight into all of those assets efficiently through just human? Right now we've got a great team that reads all the quarterly reports and does does a lot of that just work.
Sure.
What if you could overlay an AI, tool that looks into that portfolio and very quickly pulls out insight?
Yeah.
There's a lot of companies trying to attack that space. We're demoing with one of them right now, which are like in a beta test. That's a really interesting use case for AI in our world. And then over time, and we've talked about this a little bit, Anna Marie and I, there's a lot of people trying to sort of solve private markets due diligence in the context of AI. How do you quickly read a PPM and synthesize it? How do you quickly build a financial model based on a certain set of data? So really it can be applied across very large swaths of the business, because obviously the large part of the tool is getting a large set of unorganized data and very quickly pulling insights out of it.
Yeah,
and
we just had Spencer Burton on, who is tackling exactly that with CRE agents. I think he's trying to develop the tools to be able to standardize data.
So archaic.
Yeah.
You're looking at one PDF and you're moving data from that PDF
you got it.
to a different PDF.
Well, then especially if you have people doing their own due diligence, right, and they want to be quick about it. Who sits there? What if somebody has 5 different leases and each lease is 200 pages long?
Yeah.
So silly.
Who's going to read 1,000 pages?
I see so many ways in which I guess a company like yours can utilize that to just fast track things and be more efficient.
Yep. And you had mentioned changes. Another sort of executive change, because he's overseeing this effort for us, is we hired a new chief operating officer post my arrival named Sean Mulreed. And Sean and I actually had worked together for many years at iCapital.
Nice.
So we sort of, got the band back a little bit together there, but he's overseeing those efforts, for us.
Got it. All right, let's talk real estate real quick. We're kind of running up on time, but we still have time. Tell us, where do you see right now, asset types, asset classes, what regions are you focused on?
Sure.
Where are you getting
Where's the most
momentum?
opportunity?
If we look at our pipeline right now, one area obviously we're seeing a lot of traction is multifamily.
Sure.
I think, right, as we know, it's been a couple of tough years in the space.
Yeah, and are these value add or
I'd
class
say
A,
more probably core plus light value add.
Okay.
Not quite doing development right now, just due to capital markets, high interest rates, uncertainty around costs. It's expensive to build right now. as I'm sure you're aware. But yeah, I think multifamily, I think we're seeing fundamentals strengthen within the space, right? We're seeing supply that, it was oversupplied for a few years. We're seeing construction starts come down. I was reading from CoStar yesterday, I think nationally the Q1 rent growth turned positive at 1%, after being negative for, a few years here. So that was great to see. And I think, when I said core plus value add, I think just, right, we've seen kind of that reset basis happen, obviously, right? We're, call it 20% down from peak pricing.
Yeah.
So I think that's a space we're interested in. I think also another area where we're seeing some deal flow is retail, specifically kind of grocery anchored, necessity based retail. Right.
And are these in primary markets mostly? Or?
Typically primary, secondary markets.
Okay.
And again, right, with retail, we've seen an increase in foot traffic within the space. I think we're up 5.9% from pre-2020, 2019 numbers there. Vacancy also was really tight in the space just due to supply constraint. There hasn't been a lot of new retail coming online. Yeah. I think vacancy came in at like 3.5% last quarter. So I think that's an area that we're also seeing a lot of opportunity. And I think also, right, I mean, we have to frame everything with the uncertainty that we have in the market right now.
Sure.
Right. JP Morgan, as you probably are aware, right, forecasted the recession, the likelihood of recession up to 60%. So I think with retail, people are still going to need to get their groceries.
Sure.
The news is important, but if you're a busy real estate professional like me, you don't have time to skim through dozens of dry and ad-filled media outlets each day. That's why I read the CRE Daily. It's a free email newsletter that cuts through the clutter and delivers concise, witty commentary on the latest trends and transactions in commercial real estate. If you're a commercial real estate professional, you owe it to yourself to try it out and stay on top of what's happening in the industry. It's only 5 minutes a day. Visit credaily.com to sign up for free.
So there's
some multifamily people are still going to need to live.
Exactly.
Yeah. So office,
only office gets questioned. Only office gets questioned as if people don't need to work.
Yeah. But it's a dislocation.
Yeah.
So
we have some office in the pipeline we're looking at, specifically medical office.
Okay. Well, and that's a great niche to be in.
Kind of in the DC area currently, we've got some deals there that
it's really hard to get a shot via telemedicine.
It is. How do we crowdsource that? That's
right.
Okay, well that's interesting. Sunbelt markets, I'm sure still.
Yeah, I think Sunbelt. I think we're definitely again kind of goes back to has been oversupplied, but I think we're seeing stabilization.
Who
there as
are
well.
all these people who like good weather? I don't get it.
Yeah, right.
Weird. Well,
whatever happened to grumpy New York?
Morgan Properties just bought this 3,000 unit portfolio in the Midwest.
Right.
That was big news.
Yeah.
So we love the Midwest.
Yeah. We've been looking at some shallow bay industrial kind of in the Minneapolis area.
Okay.
Seeing some tight kind of fundamentals there.
Yeah, we love these under the radar markets. Alex, he's a big fan of Des Moines.
Yeah, big fan.
Goes there on vacation.
John, when do you see the platform launching some of the new business lines that you spoke about, or new asset classes rather, not new business lines?
Yeah, we're aiming for the fall. Like as I mentioned, there's sort of a lot of things that have to happen.
Yeah, of course.
To make that efficient,
Sure.
We want to do it the right way, not the quickest way. And so we're aiming for the fall, and there'll be sort of an accompanied media advertising sort of launch to support the new
Cool.
the new products on the platform.
We're excited to see. What tell us kind of as we wrap up. Tell us where you see the future of crowdfunding. And where we already kind of touched on it, but where do you see your business? I think obviously you're going to be diversifying your service line some, but give us your thoughts.
Again, I sort of move away from the term crowdfunding.
Yeah.
But where we see the sort of the future of the business is...
What is the right term? I didn't mean to interrupt.
Tell us what it is.
I'm not...
Always when I think of it for commercial real estate, I think of online syndication, right? We're just taking the
Online
syndication, moving it online.
Yeah, or said it differently,
Right.
self-directed, private investing.
Open syndicating.
Yeah.
Let's
You go chat GPT a couple.
Yeah,
of
let's brainstorm
terms,
offline and
Yeah,
and
I
do
mean, I
this.
remember being in San Francisco. I spent a lot of time on the West Coast, in the Bay Area. 10 plus years ago, and being in some of those sort of early offices around companies that were trying to make startup like individual startups more accessible via crowdfunding.
Yeah.
And what I would say, and Mark Rowan actually had a very interesting, the head of Apollo had a very interesting quote about this in his most recent, in his Q4 sort of shareholder address. I would just say that, the difference between, people always said alternative investments put in this sort of like other bucket. I think we're moving to a world where that's changing. And the private markets in the United States are actually larger than the public markets. I think you guys know that. So there's actually nothing alternative about it. And so I think we're just moving to a world where private markets become a larger part of people's portfolios, be they real estate, private equity, private credit. And that's the tailwind I think that our business has behind it. And so I think you hear people say moving from a 60-40 traditional portfolio of public stocks and public bonds to maybe a 50-30-20 portfolio. We obviously play in the 20. And that gets us very excited. And again, real estate is just a part of that 20 and an important part of it. And then but we want to be able to sort of provide a platform where people can build that whole 20. When I say 20, I mean access to other things other than public equity and public bonds. And so that's kind of where I see the business going. But I think terms like crowdfunding or even alternative investments, I think in 10 years will be sort of gone because these things will just be more mainstream.
Yeah, makes sense.
And I think platforms like ours and other, asset management firms and other platforms, are coming up with more innovative ways to allow people to access these markets because, we believe over time they can help people achieve better financial outcomes by having access to things they previously wouldn't have had otherwise.
Yeah, makes a lot of sense.
Makes sense.
Well,
Okay.
I just want to say thank you for both of you for coming on. It's been very informative. It's exciting to hear what CrowdStreet's got cooking. I'm ready for the fall. I want to see what else
we want to see. We want to see what you bring to it.
Yeah.
Well, thank you guys very much, and
Thank you.
come
Yeah,
visit
thank
us. Yeah, we're here in New York City. We opened an office, as I think we spoke about, and
See? Office.
Office.
we're back in the office.
Back in the
Everyone's
office.
There we
believing in
go.
office.
That's right.
Okay, cool.
Yeah, we appreciate the time.
Thank you.
Yeah,
of
thank you
course.
so much.
Great
Thanks,
having you
guys.